All right, today we are going to decode the future of the money in your wallet. Right now, governments and central banks all over the world are in this quiet race to build a totally new kind of digital currency. And trust me, it could change, well, pretty much everything.
But before we get into all the tech and the geopolitics, let's just start with a super simple question, one that really gets to the heart of why this is all happening right now. Go on, take a second. How much actual physical cash do you have on you?
Yeah, I'm guessing if you're like most people, the answer is probably not a whole lot. Maybe none at all, right? We're tapping our cards, we're scanning our phones. Our financial lives are already digital in almost every way.
And look, this isn't just a hunch. The data shows a huge shift. Just take a look at the Eurozone. Back in 2019, cash was used for 72% of transactions at the checkout counter. Fast forward to 2024, and that number has absolutely plummeted to just 52%. That is a massive drop in only 5 years. So this rapid vanishing act of cash is forcing central banks to face a really critical question. As the public money that we've all known our entire lives just fades away, what's supposed to take its place? Okay, let's really get into this. Because you might be thinking, so what? My digital payments work just fine. But it turns out there are some hidden risks in our current setup that have policymakers pretty worried. First off, we've got to wrap our heads around a key distinction. The cash in your pocket is public money. It's a direct promise from the central bank. But that number you see in your banking app, that's actually private money, created out of thin air by commercial banks. We're already living in a world that runs on private digital cash.
And here's where that becomes a big deal. It creates a massive dependency. For instance, in the European Union, a full 2/3 of all card transactions are processed by non-European private companies. The actual rails that our modern economies run on are mostly owned by just a handful of foreign firms. And this way of thinking is a pretty big shift. A recent really high-profile report on European competitiveness put it bluntly. It said, and I quote, "Dependencies are becoming vulnerabilities. What used to be a business reality is now seen as a strategic weak point." So when you boil it all down, this isn't just about technology, it's about power. For governments, the big prize is something called strategic autonomy, which is just a fancy way of saying the ability to control their own financial destiny in this new digital world. And this brings us right to the solution that everyone's working on: a central bank digital currency, or a CBDC. You might hear it called a digital pound, a digital euro, or a digital dollar, but the core idea is exactly the same. So a CBDC would be issued directly by the central bank, just like physical cash. It's not a liability of a commercial bank like your deposit is, and it's definitely not some volatile, decentralized thing like crypto. The whole point is for it to be the digital twin of a banknote, stable, secure, and backed 100% by the central bank. Now, it's really important to get this next part right. The vision here is not to replace commercial banks or private payment companies. Instead, the goal is to create a core public infrastructure. You can think of it like a new set of digital railway tracks that private companies can then come in and build all sorts of innovative new services on top of. So how would this actually work in the real world? This isn't just a thought experiment. Countries are already actively exploring features that could fundamentally change how we use money. The Bank of England, for instance, is kicking the tires on a whole range of possibilities for a potential digital pound. We're talking about things like special digital wallets for tourists, payments that can work even when you're offline, and maybe most intriguingly, something called conditional payments. And it's not just blue sky thinking. Russia is actually moving ahead with plans to use its digital ruble for real deal government payments, things like salaries and social security, as early as 2026. It just goes to show you how fast the theoretical can become very, very practical. This ushers in this powerful and, let's be honest, controversial idea of programmable money. Imagine government stimulus funds that could only be spent on essentials like food. Or picture a parent giving digital allowance money that literally can't be used to buy video games. It promises huge gains in efficiency for sure, but it also raises some profound questions about financial freedom and control. And that leads us directly to the central tension in this whole debate. You see, creating a system this powerful isn't a simple win-win. It forces a massive trade-off right at the heart of our financial system.
Okay, so here's the conflict. For regular people like you and me, a CBDC could be awesome. It would compete directly with bank deposits, which might force banks to finally offer us better interest rates. But, and this is a big but, if too many of us move our savings from commercial banks into a central bank's CBDC, it could starve those banks of the deposits they need to lend money out, which could slow down the entire economy.
And what's really interesting is that this impact isn't the same everywhere. Economic models suggest that the potential net benefit for the whole economy, what economists call a welfare gain, could actually be higher in the US. This is partly because its economy is less dependent on traditional bank lending than the euro area is. So when you zoom all the way out, you start to see the bigger picture. This is all part of a quiet but incredibly high-stakes global race to define what money itself is going to be in the 21st century. And make no mistake, this is moving forward. The European Central Bank is on a very deliberate multi-year path. They've already finished their investigation, and now they're deep in a preparation phase. We might not see a digital euro actually issued until around 2029. This is a marathon, not a sprint. So this race isn't just about playing defense against vulnerabilities, it's also about playing offense. By being the first to build and export these new systems, nations are competing for influence. They're competing for the power to set the global rules for the next generation of digital finance. Which leaves us with the ultimate question, right? As we build this entirely new financial plumbing, what are we really creating? Is this the dawn of a safer, more efficient, and more innovative global economy? Or does it risk opening a Pandora's box of unprecedented surveillance and state control over our lives? The answer is being written as we speak.